Everyone, welcome. I'm Larry Connors, and we'll welcome you to this presentation on the AI Wealth Creation Traders Report. We're going to be covering a lot of areas here in AI, and not only talking about AI as a whole, but talking about more specifically how to go about trading and investing in these AI companies. As I'm doing this recording in the second half of 2004, there's been a tremendous, I'm sorry, 2024. There's been a tremendous run in these stocks, in many of these companies. But this is a revolutionary technology, brand new technology that is changing mankind, will continue to change mankind. You'll see some of the things that are coming up, and just some announcements just came out yesterday alone that was done on the digital biology side. And the opportunity to invest in this is what I consider to be a once in a lifetime opportunity. I was fortunate enough to be there for the internet. In fact, trading markets got founded back in the late 90s. Fortunate enough to be there for the internet, was also had the ability to be able to trade as the internet emerged. That was a revolutionary technology at that time. AI is even larger. And in the movements in the stocks and the movements in these companies, in my opinion, and many other people's opinions, and you'll see some of those people's opinions in a couple of minutes ago, there are just much, much larger than what other technologies have brought. AI, computers, and pretty much every revolutionary technology in history, this will surpass it. Okay. So what I'm going to do here is I'm going to walk you through. We're going to do this on a step-by-step basis. There's a lot of knowledge that's going to be taught here. Whether you move ahead and decide to subscribe to the AI Wealth Creation Traders Report is up to yourself. Okay. What I want to do is first make sure you learn and able to take this information and this knowledge and be able to use it on your own. The main thing here, though, if you want to go further and go deeper, you'll get an opportunity to see how the subscribers to the AI Wealth Creation Traders Report, what they receive every week, and the way it's put together, not only just in looking at the companies, but how to go about structuring trades. Doing this for 43 years. And there's one thing about picking winners. I'm going to talk about that in a couple of minutes. It's much more important on a professional basis. You need to know how to structure. Ideally, you want to be able to structure your positions so you're risking a minimal amount in order to put yourself in the position to make many times that amount of money. It's known as asymmetric trading. If you take a look at some of the great wealth creation that's been done, especially in the financial markets, it's done through asymmetric trading. I'll teach you how to do this to some degree here, as we covered over here, and then we'll walk through this, especially as it pertains in the AI industry. Before we move ahead here, need to give a disclaimer. First, we're not an investment advisory firm. Nothing here is any type of investment advice, nor their recommendations. If I talk about anything that's there, it could be there based upon hypothetical results. I will show you 3 examples of trades that I have taken. I'm just basically using them as examples to be able to show the potential for asymmetrical returns. And from bigger picture, there's no guarantees of future returns. Okay. So again, I'd like to welcome everybody. For those of you who are here and may not know me, maybe seeing me for the very first time, let me just I'll walk through the background. So I just want to thank you for joining today's webinar. I'm excited to have the opportunity to share a number of valuable insights with you on how to professionally trade in AI companies. So AI has been described by many as the greatest technology revolution in mankind. And the opportunity to trade and invest in this revolution is a once-in-a-lifetime opportunity. I've been in the trading industry for 43 years, and during that time, I've had the privilege of learning from some of the very best minds that are out there. In my career, as part of my career, I've authored a number of top-selling books on trading stocks, ETFs, and also volatility. A handful of these books, I believe I've written over a dozen books, but a handful of these books, first one that was probably had the largest impact was the one that I wrote with Linda Raschke. Linda, if you don't know who Linda is, one of the great traders out there, a wonderful person, still remains a friend. We've been friends since we've written the book. But we wrote Street Smarts back in 1995, and you can see from Stocks and Commodities magazine, it got voted as one of the trading classics in the 20th century. There's another book I wrote there along the way that very few people know about. We put it out, I published it right before we launched on the internet side, Connor's on Advanced Trading Strategies, and I've seen it show up on Amazon a number of times, and it's offered for resale for over $1,000. I've seen it as high as $1,800 for sale. Short-term strategies that work was published about 15 years ago. It's a quantified guide to trading stocks and ETFs. Maybe the best-selling, that Street Smarts may be the best-selling books that are put out there. Back in 2018, I wrote Buy the Fear, Sell the Greed. In my opinion, that may be the most comprehensive and best book that I've written. It's taking 7 behavioral quant strategies for traders. It really is for intermediate level to professional traders that are there. It was supported all the way through quantitative analysis. Everything was back tested up through a number of years previously leading up to there. We have recently updated, at least internally, the test results, how they perform, how these strategies perform on a walkthrough basis, meaning how they performed since it was published. And the majority of the strategies have absolutely held up, which is great to see. Okay. Alpha Formula was also published, high probability ETF trading, which also won a handful of awards when it was published back in the early stages of the ETF trading. And also, I created with my research team Connor's RSI, and an introduction to Connor's RSI. Connor's RSI still remains today, to the best of my knowledge, the only quantified oscillator that has ever been developed out there. A lot of oscillators that are out there, MACD, Bollinger Bands, etc. Connor's RSI still remains the only quantified oscillator that's ever been created out there. So it's been incredibly rewarding to see how these books have helped hundreds of thousands of traders achieve better results. I've also had the honor of speaking at numerous professional trading conferences around the world. And these experiences have allowed me to connect with traders from various backgrounds and to understand the unique challenges and opportunities we all face in this dynamic industry. Trading industry, investment industry, and the financial market industry are always changing. It is capitalism at its best. It just keeps getting better, better, and better. Fortunate enough to come into the industry in 1981 and 1982, right after right out of college, and it's just been incredible to see just the advancements, and the advancements just continue to go. The advancements are probably growing even faster today than they ever have before. A few years ago, I was awarded the Charles H. Dow Award for Best Research. So this was a personal milestone, and it was also a testament to the hard work and the dedication of the research teams that I've had in place. And throughout my career, what I've also done from time to time, and I've been doing this for about over 20 years, I've been fortunate to be able to mentor and also partner with some of the legendary traders from around the world. I've also worked with asset management firms, including those managing. There's one firm that I've worked directly with. They hired me specifically for a project, got a chance to work with them, and they manage over $1 trillion in assets. These collaborations have enriched my understanding of market dynamics, also very important to understand trader psychology, and I'm going to share some of these insights with you today. Again, I want to make today very much about teaching, and also talk about directly as it pertains to AI, investing in AI. And then if you want to move ahead and be part of getting access to a weekly report that I put out, you'll have the opportunity to be able to do that. So when we took Trading Markets at tradingmarkets.com, it's a platform that I founded back in 1999. Our mission has always been to provide high quality education and research to empower traders. Our focus is primarily on offering data-driven strategies that you can implement and there to enhance your trading performance. In this webinar, what we're going to do is we're going to do a deep dive into the exciting opportunities in trading, many industries and companies that will benefit, and I should say are already benefiting and will benefit immensely from AI. We're at the cusp of a new era here with AI technology. There's no doubt about this. There's going to be tremendous wealth created over the next few years, especially for those traders who understand how to trade these stocks. And today I'm going to teach you a handful of ways to do this. I'll also show you how you can receive this knowledge and information directly from me on a weekly basis. So you'll be able to get this each week. So again, thank you once again for being here. let's dive in. And I look forward to this being a productive and insightful session with you. So I'm just stating it, and you'll see the quotes that are coming up over here. AI will be the greatest wealth creator in history. As we've now seen, and as many of these stocks and companies have doubled, tripled, and quadrupled in value, this is still just very much the beginning. It's day one. For those of you who are baseball fans, which I certainly am. I like to say this is not even the first inning. They haven't even thrown the first pitch yet. This is the batter. These batters are first batter of the game is just coming into the batter's box. That's how far we have to go, and this is how early it is. And ideally, with any revolutionary technology, the earlier you can get in, the better. And I know this has been, especially in the last year and a half from the time I'm doing this presentation, there's been a pretty good run up in a number of these companies, but there's many more companies out there. And then you'll see in a few minutes on a global basis. Again, this is just the very, very beginning. So it's exciting to be there at the beginning, and you'll have an opportunity to participate in it. So AI is the greatest technology breakthrough in history. Many of the greatest business and technology leaders around the world agree that this revolutionary technology is larger than the computer industry, and it's larger than the internet combined. So here's the CEO of Alphabet, which is Google, Google, and parent company is Alphabet. And Sundar is really a brilliant CEO, and he said artificial intelligence will have a more profound impact on humanity than fire, electricity, and the internet. And think about this. I mean, we're talking about centuries and centuries and centuries here of these type of breakthroughs. Fire was there obviously many, many centuries ago. Electricity there in the past couple of centuries, and then the internet, which pretty much came around in the 90s. It will have, AI is going to have, in Sundar's opinion, which I very much agree, a more profound impact on humanity than fire, electricity, and the internet. Okay. It's a once in a lifetime trading and investment opportunity, and one which is going to create tremendous wealth, especially for those who were there early as we are in this technology revolution, as we stand today. Matt Higgins is over at Shark Tank. Matt Higgins is a successful venture capitalist. That's Matt over to the right, and Matt really knows what he's talking about there. And it's a great quote that he stated up there. AI will be the greatest wealth creator in history. Okay, and again, we can already see it from many of these individual companies that have already run up substantially in price. But there are many other companies, many other companies that are there. Plus, you have your core companies that will, likely dominate AI for many years to come and potentially for many decades to come. Wealth creation is already in motion. It's still very early, and it just is going to continue. Today, what I'm going to do is I'm going to share with you guidelines on how to identify and how to trade AI stocks, AI ETFs, single stock ETFs, which are growing rapidly, and also focus a bit for those of you who trade options on longer dated options in AI companies. I have a number of longer dated options in AI companies. I'll share just three of those with you in positions that I had to show the asymmetry in there. But if you do trade options in there, that's another way to be able to do that. Where you're going in, I'll show you how to be able to go in, take the positions, take those positions, structure the options where you have a fixed risk amount of money with the opportunity and the goal and to make many times what was initially risked. It's all about risking one unit, a fixed amount of money, predetermine your risk ahead of time with the goal of making many times that amount. That's what asymmetrical trading is all about. And this is where wealth creation is all about. And AI, certainly as it plays itself out, structuring your trades and building your positions those ways are, in my opinion, one of the very best ways to put yourself in the potential to create returns and hopefully be able to create tremendous wealth for yourself. So I'll walk you through my process. I'll also share with you additional in-depth knowledge. And what I'm going to do is I'm going to show you a simple example. I'm going to show you an example of the AI Wealth Creators Traders Report. You'll see how I do this on a weekly basis. The one I'm going to show you is one from a week ago from the time that I'm doing this presentation, but you'll see how this is all done. And then if you're interested in becoming a subscriber, you can go to the link that's over here. It's also, this doesn't hyperlink. This is going to be linked over from wherever you watch it. You'll be able to press the link and be able to go directly there. Also, I'm going to give you the email address of Darlene Davis. Darlene handles day-to-day operations for us, and she'll be able to assist you if you want to just reach out to her directly to become a subscriber. So let's get going now. Let's start learning. So this is now moving into the learning phase of this. And as you'll see, professionally trading, investing in AI is much bigger than those attempt to pick winners. And again, having been doing this for 43 years, there's a repeatable cycle that's there. Every revolutionary technology that comes out, or any type of, this isn't a fad, but any type of new thing that comes out, the majority of what we see on CNBC, Bloomberg TV, and I'm looking to my left, and I have it up there right. We have Bloomberg TV up there right now. Take nothing away from the people that come on there, but what you see over and over again is this constant looking to pick winners. What we're not looking to do is just pick winners. Picking winners is pedestrian. It's done by amateurs. It is more important. It's more important to take a professional trading framework, put that in place, one which allows you to potentially make many times your initial capital, while at the same time doing so year after year as the AI revolution takes over as the greatest technology revolution in history. Okay. What we're looking here to do is, of course, identify the companies that are going to benefit from that. But even more important than that is structuring your trades, building your positions in such a way so you can limit your risk to a small amount. You predetermine what that is, with the opportunity and the potential and the goal of making many times what that initial risk here. Okay, so the goal is wealth creation. And even though I can't promise future results, we do know that the demand for AI is immense today, and it's only going to grow further and further and further. In fact, as we're speaking right now, it's growing exponentially. Done correctly, many people would create lifetime and even generational wealth as this revolutionary technology leads the world. What I'm going to do now is bring you onto the AI Wealth Creation Traders Report. And what we're going to start with first is looking at the guidelines that I provide. This is where you're going to be able to learn here. But these guidelines are some of the guidelines that I use to put in front of everybody who subscribes to the report. I've taken some of the key guidelines that you can learn from. Again, there are many more guidelines that subscribers get and able to use. But for today and for right now, I just want to give you an idea of what all this looks like, and also very important that you go about learning on this. So as I move ahead over here, this is Stanley Druckenmiller. For those of you who don't know, if you don't know who Stanley Druckenmiller is, Stan is one of the great hedge fund managers in history. His performance over the last 40 years has been absolutely spectacular. His returns, I don't think, these are audited returns. He's a multi-billionaire. He has never had a down year in over 40 years, which is absolutely incredible. And there's a lot of logic in the way he goes about building his positions. It goes about looking at things. And very much one thing in following Druckenmiller's career and following just how Druckenmiller has done things is he's very much into asymmetrical trading, which is very much, he'll come up with a theme that's out there. Okay. And AI is actually one of his main themes right now. And it has been for a while. And what he does is then goes about, he and his team go about, and they build positions, as we were discussing earlier, is taking, how can I build this position, taking the minimal amount of dollar risk with the opportunity to make many times what was initially put up. That's there. He's an absolute master at that. So again, this isn't just about picking winners. As I stated before, picking winners is pedestrian, is what amateurs do. The professionals go about not only identifying where the potential winners are, but then where the real magic comes in is how they go about structuring the positions. So I love this quote over here because this very much ties into AI, okay? And the quote that he said has over here is the number one principle is not to look at the world today, what's happened in the past and what's happening currently in the price. Try to think how the world may look differently 18 to 24 months from now and base your investments on that. And it's not what's true and not what's true today. And it's amazing what this single exercise can do for you. What we're doing in the AI traders report is I'm always looking at current price. Okay, current price, always plays a role in structuring the positions. So we're looking at current prices. But what is more importantly is what is the world going to look like? Especially as it ties into AI. Where is it potentially going to look like 18 to 24 months out? Okay, so if you just look back over the last 6 months of all the transformations that have happened, all the growth that has happened in AI. And it's been done in industry after industry after industry. I'm going to share a couple of those industries with you in a couple of minutes and also share some ideas with you. We want to be able to build our positions in such a way that we want to be there as AI builds itself, as AI exponentially builds itself out on a global basis over the next 18 to 24 months and potentially even longer. The mistake I made on the internet when it was there, okay, so I was continuously trading over there. We launched the Trading Markets website at that time. But as a whole, I'm pretty much a short-term trader. I'm looking to the things that I publish out there are mean reversion, looking for pullbacks and then selling into strength. The mistake that I made on the internet, which I have made sure I will not make this mistake. I've not made this mistake, and I will not make this mistake in AI. So the mistake I made on the internet is I would buy a company, and the company would move up pretty quickly. It'd be an internet company, could move up pretty quickly, and happy. And sometimes the gains could be 50% in a short period of time. It could be 100%. And I had one position in particular that I got into a company that was $1 a share. Basically, I understood what the company was doing, and the stock went up to $3 a share. Tremendous. That was great. Triple money in the investment in a short period of time. The stock I think it ended up peaking out, and I believe it was bought out at $60 a share. It was a tremendous amount of money left on the table. And I did that time after time after time. I was in some of the internet search engines that was there. That was pre-Google. So I was at Lycos, I think at 6, and it went up to 9, 50% out of that. That stock continued to run. But the goal very much is here with any revolutionary technology is not to basically look to take quick short-term profits. Okay, there's nothing wrong with doing that. But if you're looking for wealth creation, it's ideally being in positions that can go up many, many times in my. And what's happening here, because it's so early in this AI revolution and this new technology revolution, is that there's a high probability, at least in my opinion, that many of these companies that are there, some that even haven't even started moving, but as they put AI into their processes and makes their companies even better and better and better, those stocks have the opportunity to move up many, many times. But also, if you're building your positions in such a way, structuring your positions in such a way, as Stanley Druckenmiller has just done absolutely fabulous over his career, it's putting yourself in a position where you're able to make, if you're correct, potentially able to make many, many times what the initial risk is about. Okay, so that's a very important part. Is let's not worry about on a day-to-day basis where things are. Let's not so much look over the next couple of months. Let's try to look out over the next 1.5 to 2 years, if not longer. This is in an infancy of a revolutionary technology. One that is very likely the largest revolutionary technology that we've ever seen in our lifetime. We get there early, build the positions, and let the technology let the technology do its thing as it plays itself out. So number two, the AI Wealth Creation Traders Report, it's concentrated on AI industries and companies. And because there are so many industries and companies directly in AI, and even more importantly, supplying AI. okay, in any type of growth situation, exponential growth situation that's there, the winners are the suppliers. Be the supplier. I mean, that's, for those of you who have business backgrounds and or have built your own businesses, know that the suppliers tend to make the greatest amount of money when it comes in there. So it's not only the ones that are directly in AI, but the ones that are suppliers that are in AI, and also the companies that are benefiting from AI. There are many, many companies today that are benefiting from AI. It's just begun. Quarterly earnings are coming out, and they're as I'm doing this presentation, and you're seeing company after company basically showing they're stating the results of what just the early implementation of AI is having dramatic impact in their companies. So there are so many companies out there to do this. It absolutely must be selective. We can't be in every company that's out there. Ideally, we want to be in the leaders, and ideally, we want to be as diversified as possible in as many industries as possible. And I'm going to show you a framework that's going to be able to, you'll be able to see this here in a couple of minutes. So again, it's going about focusing on AI, knowing that we want to be in the companies that are directly in AI, the suppliers to AI, and also the beneficiaries of AI, and then choosing and identifying the companies that are going to be, or potentially going to be the winners on a longer term basis. So again, diversifying, properly structuring your positions, and then correctly sizing your positions, which is of utmost importance. It's the single best way, in my opinion, to participate in this revolutionary technology. I just mentioned here that it's immense. AI is absolutely immense. So this is an AI industry framework that I keep in front of everybody who's a subscriber to the service. And what I do on an ongoing basis is I build this framework out. I build out the companies that are within this framework. And you can see that there's so many things that are out there, from technology, biotechnology, and healthcare, which I'm going to talk about in a couple of minutes. Jensen Huang, who's the CEO and founder of NVIDIA, said that this is going to be the greatest breakthroughs that are going to occur in biotech and healthcare. I'm going to share a couple of them with you. Two just got announced yesterday, coincidentally, right before this presentation. Absolutely financing. The things that are being done on the finance side are absolutely incredible. Energy, communications, there's real estate, there's communications. Look at the industrials, and if you take a look in the lower right-hand corner on the defense side, there's just a major conference last week, and they were just talking about how AI is. It was put out by the military. It was talking about how they're using AI and the amount of money that in investments that they're making in AI for military purposes, for defense purposes that are there. You can go after industry after industry after industry. This touches every part and multiple parts of our lives. It touches every industry that's out there. And the goal there is to have a diversified portfolio of positions that are in place. Let AI, let the technology take place. Have those positions structured. So again, risking one unit with the goal of making multiple units, and do this over and over and over again. Okay. So I'll talk more about this framework here in a few minutes, and you'll see how it plays itself out. For those of you who trade long options, one of the ways to be able to do this is that none of us know when any of these companies, or whether AI is going to, whether the AI industry or whether any of these individual companies, when they're going to move up. Okay. So we saw, for example, in the first 3 months of 2024, a big move. That April they came in, then May and June they moved back up again. What you want to do is, instead of trying to pinpoint just one time period there on the long options, a more professional way to do that is have positions in multiple time frames and also in multiple strike prices. Multiple time frames would mean that basically you may have, let's say you said, I'm going to put 1 unit into this, okay? Multiple time frame, 1 unit is going to be $1 amount, okay? You might split it up 3 ways. Just say, I'm going to have options that go out 3 months. I'm going to have options that go out 6 or 9 months. And if they have the options that are there, which many of them do, you'll have options that will go up 1, 2, and maybe even longer, but 1 year, 2 years, and maybe even longer. As I'm doing this presentation here in 2024, there's options that go out to 2027. The goal here is not to do like I did in the internet phase, where basically I was taking profits too early. I was going in, making the profits that were there, but taking those profits too early, and then tremendous moves ended up occurring over there. The goal here is basically say, you know what, take a step back. We can leave it up to the people who go on TV and on CNBC and try to make predictions as when things are going to go, and just basically drop our ego and just become egoless and just say, I don't know when this move in this individual stock or in this individual ETF is going to move. I do know that AI is going to play a major role. The demand is going to come greater and greater, and have positions in there that are done on multiple time frames. Also have it on multiple strike prices. Okay, ideally, a lot of the positions that I have in a lot of positions that are in the traders report tend to be at the money or slightly in the money that are there. But there's also positions that go out much further. Those are obviously going to be less expensive to be able to purchase, to be able to get more contracts. And if those stocks do have moves, have the opportunity to make, because of the position sizing, have the opportunity to make multiple times. Again, should the movement take place within that time frame. Combining multiple time frames with multiple strike prices is the professional way to be able to do this. Okay, take a step back again. Risking one unit, which is a fixed dollar amount. You can sleep at night. You know exactly what you have. Risk market can do anything that's out there. It really doesn't make a difference. You know exactly, right to the dollar, and it really should be right to the penny. This is what my max risk is, and the goal there is to make multiple times what the initial amount of money that was put up there. This is professional level diversification, and it allows you the potential for greater long-term gains. This is not usually taught out there, but this is the way the quant hedge funds do it. This is the way the better hedge funds do it. And if you're going to go about doing this on a professional basis, meaning that you're structuring it, you're structuring this and looking this on professional. Doesn't mean this is what your primary business is, but you're doing this professional. This is a multiple step process. The identification and selection of the individual stock, industry, or ETF, then putting on long options, multiple time frames, and multiple strike prices. The main goal here is to be there, and I can't stress this enough. The goal here is to be there if and when the stock has a large move. That's what you want to do. Is because when you're there, when they do have these large moves, and we've now seen it this over the past year and a half, it's just incredible how they'll run. And many times, this will occur after the company will come up with earnings, and company will start making some forward-looking statements of what they expect to happen. Those companies, the market is a forward-looking mechanism, and those companies will end up, when that does occur, oftentimes those stocks end up growing tremendously. And then if you are trading options, the option positions have the potential to make many times what you originally put in there. Okay. Tying 3 and 4 together, I strongly suggest trading in units. And what this means is risking the same dollar amount per position. What I've seen, and again, having done this for over 40 years and having worked with thousands and thousands of traders, and knowing hundreds of thousands of traders have read my books, most non-professionals will go about and put various amounts of money at various times, and they'll do things like, I buy 5 contracts of an option, or I buy 1,000 shares of a stock. Well, we all know 1,000 shares of a $3 stock is very different than 1,000 shares of a $100 stock. Okay, so what we want to do is basically balance same dollar amount, especially with options in there. Predetermine what your risk is, what one unit equals. Okay, and that one unit is again going to be, you're predetermining, you're in control of this. You're predetermining, this is what I'm willing to risk on a percentage basis. This is the dollar amount that's there, with the objective and with the goal that you have in mind, that should this stock or this industry really take off and really begin to run as AI continues to expand and expand and expand, you're in the position to potentially make many times what you originally put up. If you're wrong, you'll lose one unit. If you're right, you have the opportunity to make many times that unit. And that's what asymmetrical trading is all about. That's professional level trade structuring. And again, not to keep going back and saying things about what you see on CNBC or what you might be reading online, but this is this type of professional level thinking is important, quite important, And from the people that I've interacted with over the years, very, very structured. Those successful ones are very, very structured in going about using this approach. You can see, Druckenmiller uses the same type of approach. Many hedge funds, many of the better hedge fund managers use this approach. Again, this is something that you can take away from at this presentation. When you're looking at your unit size, basically keep it consistent all the way through. And here's three examples of asymmetrical returns. These are in AI positions that I held a little bit earlier this year. So NVDU is a single stock ETF. It's the leverage version, one of the three leverage single stock ETFs for NVIDIA. Okay. NVIDIA is basically, has had its run, has had a big run. We'll see how it plays itself out over time. But as you can see over here, in this position over there in the right-hand corner, you could see I paid $14.74, or $1,474 per contract for the position. And as NVIDIA, and there was the July 2024 55 calls that were in there, paid $14.74 for them. And as you can see, when I did the screen capture for them, they were 81 bid, 81.10 bid, 83.40 offer. Okay, risking a certain amount that was there. The fixed risk was the price times the number of contracts that I had. But as you can see over there, made many times, at least when the screen capture was there, my position had appreciated many times from what was originally put up. NVIDIA itself didn't do that, didn't have that type of gain. But because I structured my position in such a way that I predetermined my risk and put myself in the position to make multiple times to do it. And in this case, it worked out quite well. Give you another example over here, Micron Technologies. And Micron is obviously a major player as it pertains to being in the AI industry and basically being a supplier in the AI industry. These were the June calls that were there. And this position goes out to 2025. Okay. So this is an example of a long-dated option that's over there. And as you can see from the screen capture that was over there, paid $24.91, so $2,491 per contract. And at the time that I did the screen capture over there, they were trading up at 73.75. There's nothing for me to do. Okay. Could have gone up higher, could pull back. I'm looking out to 2025. I want to be at Micron for as long as possible. Doesn't mean that Micron is going to be, is just going to go up. But as AI expands itself out and Micron executes their business plan and the game plan, and as the demand becomes greater and greater, that's there. I've already predetermined my risk. Have a nice head start to it, almost a triple on the returns over there. And then as it stands right now, it goes all the way out to next year. So good position to be able to be in. Again, what you saw there is something that was short dated and then with NVIDIA, and then you saw something that was longer dated here. And again, looking to be there. I don't know, Micron had a good move, then pulled back in with many of the big cap stocks. And that is, as I'm speaking right now, it's begun to move back up again. But I'm looking out to 2025 in this individual position with Micron. Give you one more example. And one caveat, I should say, they don't all look like this, okay? I'm using these as examples. There's plenty of ones that lost one unit there along the way. That's just part of the territory. Anybody that tells you otherwise, they're not stating the truth, okay? Reality is that what we're looking to do and what we're doing is we're using a revolutionary technology, we're structuring our positions in a professional way with the goal of making multiple times that, okay? So this is an example of the semiconductors there, leverage semiconductor, SOXL. The options were the June 30 calls, and as you can see, I paid $631 for them, so $631 per contract. And as you can see, when I did the screen capture over there, the last print that was there on the screen capture was 36, well, 6 times what the original investment was. That's the goal, to do this over and over and over again. Okay. And hopefully this is helpful to you. You can take this and use this. And again, if you want to do this on a weekly basis, subscribe to the AI Wealth Creation Traders Report. Let's go over to number 5. This is an individual decision. I personally like to hedge positions out. Okay. I like to hedge to a certain degree. Hedging position, hedging AI positions, potentially hedging the portfolio. This is something that I've grown into a habit. I like running in a sense, a long short. I would call it a long short fund. I run two long short funds that were out there, but this is not my own money that I do it with. But I like doing some sorts of hedging that are there that just fits my personality well. I'm comfortable with it. This assumption is something that I do, and it really is up to yourself whether you say, you know what, I don't want to hedge it out. I just really just want to go for broke, or I want to basically be in a position where I can just hedge out some of the day-to-day movement and some of the potential volatility that will come in. So now what I'm going to do is you're going to see things that are blanked out over here that are basically blurred out. This was done out of respect for the many subscribers who pay for this. Okay. So what you're going to see over here is this is the actual traders report that's there, but out of respect to the many subscribers who pay for this, I can't give the, out of respect to them, I'm not going to give the symbols that are there in some of the things. What you will be able to do, though, is I am going to teach on a handful of these things. So conceptually, you'll be able to understand if you do subscribe to the AI traders report, you'll see what these symbols are. So I have two primary ways of hedging that I use to hedge out hedge out some of the potential moves that are potential risks that are in AI as a whole, and also the overall market that's there. And the second one is really cool because nobody in the world literally ever talks about this, is probably even aware of this. I might be one of the few people that have even made the world aware of this. My subscribers that are in the report, they now know it, and it really is something really cool. But talking about two ways. So you'll see in the report, I'm providing suggestions there to be able to do that. So short, and that's the symbol that goes there, or go long, which is the 3x version of the ETF, to offset your long, and it basically to discuss which of the positions to offset it that's there. So these are something that basically, if you subscribe to the report, you'll be able to do for yourself. I'm just introducing this, that again, from a professional level, hedging out positions and be able to do it. A lot of professionals do that. I like to do it to a degree. And it's just something that, if you're comfortable doing, I do provide the guidance there. If you take a look at letter B over there, this is one of the best kept secrets that it's out there. So there's an ETF that basically is not very well known, but the methodology behind it is pretty famous. Okay. ETF has been out there since 2015. Its performance has been absolutely horrible. Okay. And this performance, it's been for years, and now, it's coming on for it's now coming into its second decade. And the ETF itself is a great opportunity to basically be short this ETF, which, as I'm doing this presentation right now, I am short the ETF and I added to it. And I also have option positions in it. I have long dated calls in there. Long dated puts in there, and I'm also short some calls that are there. If you take a look at its performance, and if you do subscribe, you'll be able to see that it's absolutely gotten crushed compared to QQQ. So the methodology itself promotes itself as basically being something that should be outperforming all the indexes. In bull markets, extreme bull markets, it does its thing, but as a whole, the performance overall has been absolutely horrendous. It's a great hedge, in my opinion, to be able to offset not only your AI risk, but it's also your technology risk and your overall market risk. And if you're looking ahead into any type of bear market, okay, if you look at its performance during any type of bear markets, it's just been abysmal overall. Okay, that should say there's a typo in there. That should say the 2020. That should say the 2022 bear market that's there. This is a great ETF to be short, whether you outright short it itself or do it with options, especially in a bear market. Okay. What we're doing right now, especially using it as a hedge I'm using it as a hedge against, some of the risk that's there in AI and also overall market risk that's there. But in a bear market, when the stock market goes below the 200-day moving average, this is the time to really focus in on this. It's a great opportunity to participate and potentially make money, and really good money in a bear market. So this is an offensive weapon in a bear market. goes beyond the scope. So as you can see in the report, and also here today, this is all about teaching. Um, it just goes beyond the report of just picking, okay, which is the AI stock of the day that they think is going to go up, identifying companies in many industries that are there, structuring the positions, and then even going forward, hedging out. And one of the hedges that's there can be used overall, hedge out the portfolio, or just simply just go short this if and when a bear market does occur. The percentage of the short side hedging exposure that you apply, it's very much up to yourself. The decision is up to you. I'm providing you with the tools to be able to do that. From there, you'll go about executing. Number 6 is very important. Okay. All we hear about is who are the winners, who are the winners. We're trying to pick, they're trying to pick winners out there. The higher order thinking, okay, this first order thinking, second order thinking. So first order thinking is basically who are the obvious companies that are there. It's NVIDIA, it's Microsoft. You can come up with the names that are there. Then second order thinking, who are the suppliers? Who are going to be on the supply side to be able to do this? The third order thinking, the higher level of thinking, is who and what is AI going to replace? This is higher level thinking. It's not often done that's out there. It's done on a professional level. Hedge funds do this. A lot of hedge funds do this all the time. But you want to basically say, with a revolutionary technology, these are the winners. These are going to be the industries and the companies that are going to win. Who is this technology going to replace? And in my opinion, there is, if and when this is done correctly, just as much money can be made identifying the companies that it's going to replace and the industry is going to replace. Just as much money can be made on the short side as can be made on the long side. Again, we're looking for this out over an 18, 24-month period of time and even longer. It's already become apparent which industries are already being obsoleted by AI. And again, this is just very early stage. It's going to get larger and larger and larger. An example that I've given, I've shown this before, really was at one time up until last year, a great company is a company called Chegg. Chegg provides online educational services, mostly for children. One of my board members has 2 sons that are his youngest are twins, 13 years old. He was a subscriber, smart man, went to Harvard, very successful career. And his sons are, following the path of their father. He's very much, hands-on the education, was a subscriber to Chegg. And then ChatGPT came out, saw that it was doing it even better. This was February of last year, 2023. Cancels the subscription. And then he said afterwards, he goes, what am I thinking? Why didn't I, buy puts in the stock to short the stock? Shortly thereafter, you could see over here, and let me get this chart. They're available for you. You see that gap that occurred over there? I saw this happen live. I happened to be watching earnings after the close on CNBC. Chegg completely missed the numbers, and they said that AI is eating into the business. They lowered their projections that was there. And the founder and CEO, I give him credit. He came on the air. He basically talked it through. And sincere, built a great business, built substantial wealth for himself up to that period of time. But he said, we believe we're going to be the leader in AI. We can beat ChatGPT. We can beat some of these other ones that are out there. No chance. There was no chance of that happening. Stock went from 18 down to 10, went down to 9. As you can see, it moved sideways. That was over there. And then as earnings, as each quarter goes by and they bring out earnings, they just show they have absolutely no chance of competing. You can see the stock just basically does a nosedive. And I did the screen capture last week. At the time, the stock was at $3.33. So, there was a stock up there, $18, $19, $20 a share, and see it losing approximately 85% of its value. And, I don't know what the future will bring for this company. The founder and CEO was replaced, and he was replaced. A woman came in who basically was there to provide whatever defense or offense that they could put on, but no chance, in my opinion, no chance whatsoever. So if you take a look at an example, this is EdTech, this is education technology in there. Many of the education technology companies can't compete against AI. That's just one industry. If you take a look at the stocks of Coursera, you take a look at the stocks of Udemy, they have gone through steady declines all the way through since AI has come up. This is just an example of one industry. What will happen is industry after industry and company after company, as they come out say that they can't compete with AI, what you'll see is the stock will precipitously drop. And what I like to do is I'm not going to try to guess which of the industries ahead of time, okay? Because these things take time to play itself out. The ideal way to do this, at least in my opinion, a safer way to do this, and this is something that you can take, an additional thing that you can take from this, is let the company show their hand. Let the company basically say, look, at AI is eating into our business. That's there. Stock is going to gap down, and that's the time at that point that's the time to begin looking at this, be looking into long-term puts, in that company, because as AI builds, as AI eats into their business and ultimately replaces and potentially obsolete their business, and potentially obsolete the industry that they're in, these make great opportunities to be able to do this. It's not done in shorting the stocks, too much risk in shorting, doing it with options and being able to have it there. And we all know that stocks go down a lot faster than they go up. Having puts in these positions and having the opportunity to make multiple times, potential opportunity to make multiple times money as it plays itself out. Again, this is higher level thinking. This is third order thinking. And what I do in the AI Wealth Creation Traders Report is I suggest potential short positions, again, done with puts and stocks and industries that AI will be impacting. It's still very early in this revolutionary technology. Businesses just don't disappear overnight. This is more of something that you can do on a continuous basis, and done over multiple years. You think about what was done on the internet. On the internet, it obsoleted some things pretty quickly. And then in other industries that have done it, it replaced the industries, but it took a few years to be able to do that. Identifying the companies and the industries that do that, and having the opportunities to have puts and doing it, continue to hold those positions or just keep adding. As the puts expire, you may take your profits if it is profitable. The stocks go down, and just keep rolling and rolling. Really good strategy to do that. And again, as I just mentioned, if the company announces they're getting hurt by AI competition, what I do is it's good probability that I list them as a short. It will occur after the stock has been hit. Longer term, most of these companies, they will not be able to compete. So again, third order thinking, higher level thinking. What we're doing is, again, on the long side, taking the ones, the core holdings that's there, that's first order thinking. Second order thinking is who are the suppliers, and the suppliers are the big winners in this. Third order thinking is who and which companies and industries is AI going to obsolete? Because again, when they go down quite fast. And eventually many of these companies, at least in my opinion, they're eventually just going to disappear. Okay. And again, being short these companies, via puts, great place to be. Number 7, going back to the AI industry framework, it's built out methodically. As I mentioned, there's so many industries that are going to be impacted by AI over the next 18 to 24 months. The opportunities are immense, and these opportunities are going to last for years. They're even going to last for decades. And once again, looking at this from a bigger picture, if you take a look at the AI industry framework, there are many companies within each of these sections that are there over there. My objective with the AI Wealth Creation Traders Report is identifying the companies that are there, giving you the reasons that are there, allowing you to go on if you want to go on and do your own research, or you rely upon my research and my research team's research. Take everything that's together, learn building the positions in such a way, structuring the positions that you have fixed risks in place, in order to have the potential to make many times what was initially risk, and do this over and over again. But again, with so many industries out there, you see the framework so large. If you're hearing anything that's out there, for example, on again, CNBC or on Bloomberg, and probably what you're doing is you're probably reading it more online, as we all are, that they're saying this is the potential to say, hey, it's too late, or it's not going to have as much of an impact that it might be. This is just absolutely massive. This is vast. This touches all aspects of our lives, and it touches all aspects of everything in business. Okay, every industry, not only in business but in health, in every part of all of our lives, and not only our lives, but in the United States. Many of you, are in Europe. A number of you are over in Asia. has impacts. This is an impact on a global basis. Want to be here early. This is still in its very earliest stages of growth that's there. Okay. So what's going to happen is our strategic framework is going to guide us for years. And as this revolutionary, life-changing technology continues to grow and change the world, this is what this having a framework in place and being able to take that framework and identify the companies that are in there and then structuring the positions to be able to do this. We're doing this over and over and over again. I expect to be doing this for years and years to come. This is how large this is. Okay. Number 8, psychology. This is important because the media is out there to, they fill time. They have to tell stories. Sometimes they're good stories, sometimes they're not so good stories, but they're on they have to grab attention. Attention is what makes it go. They are all driven by advertising dollars that's there. And they'll influence all of us. I mean, we're all human. We're subject to the things that are out there. And even though I've been doing this now for over 4 decades, I'll go read things that are there. My initial reaction will be just in line with, what would be expected. I'd expect myself after doing this for 43 years to be immune to it. I'm not. It basically is, I'll have an initial impact and then I'll take a step back and say, I'm going to look at it from a bigger picture and say, okay, I'm not really, really, really care about on a day-to-day basis. I'm again looking at this in over a longer term basis. It's a revolutionary technology, as you can see, what was stated over there from the CEO of Google. This is the greatest revolutionary breakthrough that it's ever occurred. Okay, so ideally, structuring those positions, looking out at a minimum a few months, and then going out maybe a half year or 9 months, and going a year, 2 years, 3 years, and keep looking, keep identifying those opportunities, and not focusing on the day-to-day movements of these things. It's a really great place to be. It basically allows you to say, you know what, I'm not going to get too excited if it runs itself up. On the other side is I'm not going to get myself flushed out. And too many people out there have already been flushed out in any type of pullbacks that are there. This is, again, a revolutionary technology that is impacting the world. Early stage, want to be able to do this. So again, we all love looking at the stocks. We're all traders in one way or another, and love looking at the companies and the markets on a daily basis. But in the long run, those day-to-day movements mean very little. This is really a belief system. If you believe that AI in the long run is the greatest technological breakthrough of mankind, there will be endless opportunities for you. Some will hit big, others will not. But what we're doing is when we're wrong, we're risking 1 unit. That's there. When we're right, the goal is to be making multiple units, asymmetrical trading, and doing this over and over and over again. This is the right industry, certainly the right industry to be doing that. And if you apply the concepts of asymmetrical trading, ideally the wins that generate multiple units of returns will far offset the 1 unit losses, especially over the longer term. Okay, so what I'm now going to do is I'm going to walk you through what you'll receive each Sunday as a subscriber to the AI Wealth Creation Traders Report. And as I walk you through the report right now, I'll also do additional teaching trading concepts for you to use. The report is not, again, not just giving, here are the companies and here's how to structure the trades. Continuous learning is giving your, I can't guarantee your returns, but I can pretty much guarantee you'll become smarter week after week, week upon week, and be a better trader because of the knowledge that you'll gain from this report. Okay, so this is what it looks like. What I have is suggested AI core positions. I currently have 4. I'm going to be adding a 5th in the upcoming week. That's there. And these positions make up the heart of AI, the mega cap companies that are at the center of the universe right now in AI. Each company is in a different aspect of AI. What I don't want to do is I want to try to minimize correlation risk. And what that means is basically by going into different parts of AI, it's still AI, it's correlation that's going to be there, but going into different parts of AI in different aspects of the AI allows greater diversification. And each of these as a whole, ideally these companies will be doing their own thing. And as they become larger and larger and larger, and as the space that they're in becomes larger and larger and larger, ideally, that type of growth will find its way into the stock price on the long term. And again, and none of these companies compete against each other, which is another important thing. So again, SN, just to let you know, stands for a stock name. So if you see SN, it just stands for stock name. And again, out of respect for people who are, the many people who are already subscribers, I can't show, I can't show the symbols. What I will do though is just walk you through. This is what it's going to look like, and also just point out a couple of examples over there. So there's a name on the core positions of the name of the company. They're at the heart of AI until proven otherwise. I also give the symbols there of the leveraged single stock ETFs. In this case, this one has three single stock ETFs that are there. These are 2X ETFs. Just as a reminder, the 2X is on a daily basis. So they adjust on each day. So just because if you take a look a week from now, it doesn't necessarily mean you'll get double the returns. Again, it's an adjustment that's there. That's how single stock ETFs, that's how leverage ETFs work. That's there. So it's 2X on a daily basis. I give the symbols there. I like trading these single stock ETFs. They're becoming more and more liquid. More and more are coming to the marketplace. Their options are becoming more and more liquid. They're a really good place to be. And again, if you believe in AI, and this is what you're looking to do, I'm giving you the opportunity. Of course, you have the opportunity to decide how you're going to structure the trades, whether you do it in the individual stocks, whether you want to use the single stock ETFs when they exist, or whether or not you want to do it in options, either in the stocks themselves or in the single stock ETFs over there. So I have suggested options that are over there. You can see in this case, in this one, there's October, and also the strike prices that are there for a half unit, and then going out even further into March, and a half unit for there. That ties into time horizon diversification. Also, there's another example over there to be able to do it, and suggestion is be able to do it with the December at the money calls. Another one part that I do is something that I like. Okay, so let me first tell you what I don't like, and pretty much having done this for 43 years. Cash secured puts are good. If you have the cash there to be able to take in a security, you want to own the security at a lower price. Cash secured puts are good. Number one, if it doesn't get down to the price, you get to keep the premium. That's nice. If it does get down to your price, you purchased it cheaper. That's really good. As long as you have the cash that's there. Naked puts is a hold all, okay, which is separate. It's not cash secured. People that are out there that do that, having done this now for over 40 years, I've seen people just basically carted out, absolutely careers, carted out. When I began my career at Merrill Lynch, they pretty quickly made me put me into into management about a year and a half after I had started with Merrill Lynch. It's pretty young. I think I was 25 years old. They had 20 people that I was responsible for. And one of the people I was responsible for, young, very, I think she was 24 years old, just had a tremendous future in front of her. Very intelligent, very serious, very, it was hard enough at the time to get hired into Merrill Lynch, but she was going to be the best amongst she was going to be the best amongst the best, in my opinion. Along the way, she and her fiance made decisions to start selling naked puts that were there in the overall market, still in its infancy in options trading. This was back in 87. She was selling naked puts. They were having success throughout 1987. And then, of course, what happens, usually start with a small position, and then they keep increasing as it's win, 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 win. 87 crash occurred. That was over there. And the next thing you know, she had, and this is someone that was making, try to remember the salary back then, but she was making probably, I think entry level at that time was $16,000. That was there, maybe some bonuses. Maybe she was making in the low 20s. Ended up getting, having all these naked puts in the 87 crash, October 1987. Ended up having margin calls for nearly $400,000. Okay. And when you're 24 years old and making about $20,000 a year, $400,000 is not going to be found. That's there. Okay. Merrill Lynch, of course, wants their money one way or another. They basically, obviously she got fired. Probably they put her into bankruptcy. I don't know what happened to her after that. I wasn't up that chain of command at that point. But I just share that story because I've seen this over and over again. Out of the money, naked puts look like a great place to be there. It's win, 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 win. And then ultimately, all it takes is one time, one black swan event. That 87 crash was a black swan event, and they get wiped out. I've seen this happen over and over again. So I'm not making recommendations on naked puts that are not cash secured. Having that cash in place where you want to buy this company, you want to buy this great AI company there at a lower price, and they're going to pay you to, if the stock goes down there, be able to do that on a selective basis, I believe is a very strong strategy. I like it. It's not the only strategy that's there. Obviously, we're looking at a much bigger picture. So cash secured puts are there for you to say, you know what, if the stock does go down to this level, I would love to own it at this level on a longer term basis. If it doesn't make it down to the price, you get to keep the money. If it does get down there, you get the stock, you have your stock there, and then you can basically have your holdings go from there. So I make cash secured puts that are there. You'll see a couple of different dates. And the dates that you'll see over there is just an update from a report. So on June 24th and then on June 30th, I suggesting, shorter dated, the July 1960 puts, 60 puts. Price to take in was $3. People had done that. Anyone who got executed on I think the following Monday morning. I think it opened up at 5. It opened up 5, a little bit above 5. So they took in 5 points. Those options expired worthless, which means they got to keep all the money. And you get to do that over and over again. Okay, so you see, and then a 7.7, there was an update, and then you could see the security itself had run up pretty significantly. And if they didn't already have any positions recommended here, the July 65 puts, again, looking to bring in above 3 points. And then on 7.15, you'll see no changes. And I mentioned that if there is short, the puts that were going to expire in a few days. So that was 7.14. That was over there, meaning July 14th. Had options that were going to expire on July 19th. Stock had already run up pretty significantly. The options were trading at 25 cents. Now you have to ask yourself, do I really want to hang around for another 5 days to take in 25 cents? Do I want to lock in my gains and then roll the position to bring in additional income? It really is up to you to make that decision, but I'm going to put it up there. Most people, and especially most professionals, they'll like to just basically close out the position and roll them over. Others, will take it right into expiration. It really is up to yourself. The main picture here is when we're going about doing this, we're identifying the company, and we have the stock, and we have at the times that they're available, the single stock ETFs. Then there's options that are there that can be done. These are usually longer dated, long calls. And also, if you want to go into have cash secured puts, it's all part of the report that's included in there. Okay. And then, as you can see, as I'm scrolling over there on 721, the short puts, they did expire worthless. Anyone who took in the positions took in anywhere from between $3 to $5. And then there was a rollover into sell the August 16 puts. Again, being able to bring in the potential to bring in $3 or more on that trade. So this is the core positions that are there. There were 4. One of them is an AI. They're building an AI empire. There's a third one that's there. Company was, as you can see, but the second company was making all-time highs, just kept moving up higher and higher, which is great. Another company that's going to be a preeminent player in a certain industry, a certain part of AI, that's in there in the core positions. And then there's a fourth company that is here that has a little monopoly in what they do. And the reports are that they're 2 to 3 years ahead of any competition that's there. Any competitor that's out there. It's a mandatory. It's a mandatory. They have a mandatory product that, in order for AI to basically run, it has to have this in there. So they do have a monopoly that's in place. It's required for all of AI, and this is a company that makes up core holdings. And then you'll see the various things that are going on over there. After the core positions, I have suggested long positions. These are companies that are good, strong companies. These are major players in AI, or they're also major suppliers that are there. And this one that I have listed over there, I mentioned it's likely going to be moved into the core holdings. I am going to move the position into the core holdings this upcoming week. I don't know when you're going to be watching this, but I'm doing this in late July of 2024. So be adding a fifth position into those core positions. And again, this is a repeatable process that's there. Second company that's over there, their global expansion. They're touching AI directly and indirectly. It's been impressive. They very much understand the future of the AI. They're likely going to be a worldwide competitive force. There's a great big company that's there. So again, these are suggestions that's there and how to go about doing this. Number four, very important, data centers, and this is what AI is. AI is all data. The demand for data centers it just can't. The demand far outstrips the supply. Need to be careful on data centers that are there. There are a number of data center companies that don't have the ability to store AI data. AI data requires liquid coolants. You want to make sure you're in the companies that have liquid coolants in place. I have a handful of these companies that are suggested over there, and also the type of option positions, if you do trade options, you may want to look at that's there. And there you'll see another company, and they're directly in the liquid coolant industry. Okay. So now again, what we're doing is we're doing higher second order thinking, higher level thinking. We have AI, and then in AI, we have data centers, and data centers, in order for the data centers to run, they have to have liquid coolants. There's a handful of players there. There's one company in particular, and this company shows up on no one's list. You don't see this company mentioned anywhere, which I like. The stock has just begun to move up. The market right now is beginning to recognize that this company is growing. This company is growing. They just came up with really great earnings, and the marketplace is beginning to acknowledge, okay, they're in multiple businesses, but this liquid coolant business that they're in, which are a major player, is having a significant positive impact on the overall business. So, you could see, demand for this is only going to get greater for these, for the data centers and liquid cooling companies that are out there. That's going to increase in 18 to 24 months. And what you don't want to do is, you don't want to be getting out of these companies too quickly. It's just going to keep growing and growing and growing. So you'll see some of the option suggestions and some of the positions that I have over there. Again, another data storage company that's there. And then a number seven company that's there. It's been a sleeper. It's right. It's coming, flying below the. It's flying under the radar. And now all of a sudden, as I'm speaking here today, over the past couple of weeks, the stock has started moving up again. It's still early stage, and in my opinion, this company has a long, long way to go. Established company that's there, not a startup, but an established company that's out there. And as AI continues to grow, the demand for the services is just going to continue to grow, likely on an exponential basis for many months and potentially years to come. Okay. Number 8 is a company that should dominate healthcare. We're going to talk about healthcare in a couple of minutes because there are tremendous opportunities in healthcare and digital biology that's there. I put down begrudgingly because I've been in this position, or I've been in options in this position now for over a year. I continue to be in it. Once this company, it's a large company. Once this company gets their act together, the senior management, and they've got a good senior management team, they'll eventually figure this whole thing out. But once they do, on a longer term basis, they should become the dominant player in healthcare. And in a couple of minutes, we're going to look at just what is going on in the healthcare industry with AI. This is where some of the greatest breakthroughs are happening, even as we speak today. So longer term, they should be a dominant player. And as they state right there, I highlighted there, if they ever get their act together, this is in the report. If they ever get their act together, they're in the right place at the right time. Suggestions: consider a half position to start until that stock really starts moving up. It is beginning to move up a little bit now, which is really good to see. Want the company, though, to prove themselves. Let them come out with the quarterly earnings and let them state the same. Okay, we now have our things, we have everything is now moving for us. Okay, everything is now, we're firing on all cylinders. Once they begin firing on all cylinders, I do believe that this stock will move up substantially. It may end up becoming one of the leaders of all the AI companies that are out there. And again, this is a healthcare company. This is going to be in the healthcare industry. they should become the dominant player that's out there. Okay. Um, Another industry, electricity. The demand for electricity is tremendous because of AI. You probably saw President Trump has now mentioned it a handful of times that the demand for electricity is going to be out there. So the once stodgy utility companies have had great moves, so far this year. They still have a long, long way to go. And it's not also electricity is not only in the United States, electricity demands around a global basis. There are opportunities in publicly traded companies, not only in the US, but around the globe. Those electricity demands are just going to continue to increase and increase and increase. And what also goes along with the electricity plays on nuclear energy that's there. There are a handful of nuclear energy companies that are there, that are out there. Some of these stocks are beginning to move pretty significantly. There are options to be able to do that, again, to predetermine the risk. But nuclear energy is in play. A couple of companies have already doubled in price in the last 3 or 4 months. And they need to, they will certainly, in one way or another, play a larger and larger role in the demand for electricity. Again, what we're doing here is diversifying our portfolio into multiple spaces that are here. You've seen this up to now. We've talked about AI itself. We've talked about data centers. We've talked about liquid coolants. We've talked about healthcare. We've talked about electricity. This is vast. This is how revolutionary this is. And what I'm going to do in the report is identify the companies there for you in the suggested positions to be in. Okay. Another company, this company is over in Europe, absolute sleeping giant that's there. And they just came up with earnings, and the earnings were great. Stock moved up pretty nicely. That's there. It is day one for this company. It's a gigantic, it is literally a gigantic company that's there. They have made a commitment to AI. They just made a $1 billion plus buyout of a company from another country that will make it even greater, making an even greater force in AI. This is a sleeping giant that's there. And in my opinion, again, not only have they gotten going, they've already gotten going, but they have had, they only have a small portion of their massive customer database that has begun to implement their services. And it's not a one and done. They're going to get paid. They get paid on a continuous basis. As the business development team on a global basis, just reaches out to all the customers that are there, they are going to become one of the dominant players in AI. And take a look at June 30th, July 30th, just like there was another company that was a sleeping giant that moved up pretty healthy. The other sleeping giant I've mentioned the other company in my webinars. This stock awoke. The long-term risk reward, in my opinion, is excellent. Okay, and if they continue to execute the AI strategy, and they've got a solid AI strategy in place, it's still very early in there. So have options in there, and looking in these options, they go out as far as 2026. Again, we're going to be looking at different option positions, but as this company becomes a dominant force on a global basis, those options, again, predetermined risk ahead of time, have the potential to make many, many times what their initial cost is, what the initial price is today. What I also give you is more companies to consider, again, on diversifications. One company in particular in the medical equipment side, they're a multinational company. They're doing some phenomenal things on the medical equipment side. And just, I read a really great report from the president of their, the president that oversees their Japanese operations over in Japan, the things that his unit is doing in AI on the medical side. And as Japan begins making purchases from this company and putting them through their healthcare system, this company, in my opinion, right place at the right time. They got there early. They put a plan in place to basically be there, not only in the US, but be a global player that's there. And again, healthcare is really one of the leading places to be. So medical equipment company, and as these breakthroughs occur, I'm going to show you a couple of breakthroughs that just occurred literally just yesterday. I'll share with you in a couple of minutes. There's going to be a purchasing binge that's going to be coming into companies such as this. So if you're looking at the options, as you see what I wrote over there, go out as far as possible with the calls, because the goal, again, is always the risk one unit. want to be there and ideally be there for as many years as possible. Okay. Um, Cybersecurity, another industry to be in. Obviously, cybersecurity is because of AI just becomes even more important. That's out there. It's this companies are seeing significant revenue growth on the generative AI. ChatGPT is what generates AI. So ChatGPT is an example of generative AI. Stock's performance has been solid. Owning a piece of this company provides additional diversification. And I just want to point out that this company, as most cybersecurity stocks, they tend to be volatile. So it has to fit into your portfolio. And want to be able to construct such a portfolio so you're able to take into account risk reward at all times. But this is something that's there again on that's there on the cybersecurity side. Make another mention, another pure play on the data center side. This is a pure data center growth play. This recommendation there, I should say these are not recommendations. These are suggestions there on number 3. There's a company that went public, a lot of fanfare with a company that went public, and they really, I've been around IPOs for 40 years. So the underwriters, sometimes will leave a lot on the table, and other times they'll basically price it up pretty significantly. This one, they priced up pretty significantly. They took care of the company, which, probably is the way it should do it. The company came out, I think it went up for a day or two, and then the stock price went down. And it was a pretty significant sell-off. I mean, the stock, I think, lost about 30% a month after going public. It made no sense whatsoever. Fundamentals are in place. They're really going to be one of the dominant forces that are there. But we don't want to buy these companies on the way down. Ideally, we want to buy these companies on the way up. Okay, we're not looking for value plays. What we're looking for is growth plays. And when you're in a revolutionary technology, buy them on the way up. That's the better way to be able to do this. So we're tracking the stock there for a few weeks, and then as the stock began, moving back up again, climbed the board, and it's up. It's continued to move up real nicely. So moved it up into the list, and then they also have options that are there. Suggested watch list. This ties into waiting for the trend to move higher, and as we just talked about, from what I have seen now for over 4 decades, that don't want to be buying revolutionary technologies. In revolutionary technologies, it's a rising tide lifts all ships. Okay, if those companies are not moving up, they were either overpriced and they took them in. I'm talking about on a longer term trend, or they have too much competition, or there's something wrong. I do not want to be buying these companies that are in downtrends, so longer term downtrends. Okay. And this is something to keep in the back of your mind, not only in AI, but any type of, any future revolutionary technology. There will likely never be anything like AI in our lifetime again. But in any revolutionary technology, you ideally want to be buying them on the way up, not on the way down. So with the digital biology stocks, this is pretty fascinating because in due time, this is where special focus is going to be for me and with the traders report. Reason to do it, reason being there, is that, as Jensen Huang, the CEO and founder of NVIDIA, stated, there's tremendous life-changing medical breakthroughs will be coming. 2 just got published yesterday. I'll share those with you in a minute here. And as he states over there, digital biology will be the next revolution. For the very first time, biology has the opportunity to be engineering, not science, okay? So when Jensen Huang is talking about it, he's looking at over a couple of years. So the digital biology stocks, as they stand here today as a whole, they've been in downtrends for most of 2024. The majority of them have been there in downtrends. Don't want to be buying them on a downtrend. Want to wait till the marketplace basically starts acknowledging. And again, it's a little bit early in there, but with some of these breakthroughs that are here, that are occurring here, they're beginning to show some life, which is great to see. Ideally, want to be buying them on as they're moving higher. And there are a number of great companies there to be able to do that with. From the bigger picture, want to be in digital biology, want to be in healthcare, want to be in digital biology. These are going to be where some of the greatest gains are going to be coming from as AI, as the researchers and the scientists are able to apply AI, brand new technology, into their research and into the studies that are there. Just absolutely phenomenal what's going on. And this is going on a, in the United States, it's going on a global basis, but in the United States, as I mentioned, um, it's being done in Johns Hopkins, it's being done in Stanford, Mount Sinai in New York City. Carl Icahn back in 2020 raised a tremendous amount of money. And obviously, for him, he raised it for people in his contest, raised a tremendous amount of money for Mount Sinai Hospital. Mount Sinai Hospital in New York City has had breakthrough after breakthrough after breakthrough in different parts of the healthcare industry that's there. And it's still just so early stage. So this is where the real revolutionary is going to be. And if you ask me to select one area to be in, it would be in digital biology and digital biology / healthcare, absolutely, because of the breakthroughs that are there. Not only is this just, it's great as humans, it's great for all of us, okay? We all want to be healthy. We all want our family members to be healthy. We want our friends to be healthy. As a whole, we want humans to be healthy. The breakthroughs that are coming through and the life-changing events that are occurring in digital biology are incredible. They'll find their way into these company stock prices. The demand for what they're bringing out will be substantial. There'll be a tremendous number of buyouts that will occur. The major companies, they built their acquisition. So as these digital biology stocks have their breakthroughs, many of them will likely be bought out there along the way. Again, it all goes into that fact of being there. So longer term, as I mentioned, is going to be, my opinion, and obviously much smarter man than me, Jensen Huang's opinion, tremendous wealth creation is going to be coming from these companies, and we're going to look to be aggressive here as the technology emerges. On July 21st, I wrote, there's so much potential here. We'll be patient waiting for these companies. As most is still downtrending. Some are beginning since the 21st, some are beginning to move up, which is really good to see. What I also do here is to expand your knowledge. I provide a knowledge center. And in this issue over here, this is a copy of an issue from July 21st. I provided additional knowledge there in the digital biology space. It's real important. The more you know, knowledge is power. The more you know, the better your decision making is going to be, the better you're going to be able to identify companies and build the positions. And it's very important to me to basically share that knowledge with you, what you learn. And plus, some of you, many of our clients have, our doctors have medical degrees in there. Other on the science side of digital biology and in healthcare. You have competitive edges that are there. And the good thing about people who are subscribing to the news to this is that many of them are sharing with me breakthroughs that are there. I'm getting, they're kind enough to share it with me, and then I share that knowledge there with you. Something that just happened yesterday, and I just put this in right ahead of the presentation. This was just published in Science News. The researchers at MIT just came out with an incredible breakthrough. So Science News just published this yesterday. Again, the day before I'm doing this presentation. Artificial intelligence detects breast cancer 5 years before it develops. Okay, this again was done directly out of MIT, and you take a look at over there, and you could see the differences in this. Take a look early at the detection, and you take a look on the left, what it looked like 5 years earlier. Okay, so being able to detect an example, this is one of many examples, but being able to detect breast cancer 5 years earlier. Think of how many lives are going to be saved. Think of how much breast cancer has impacted, whether it's someone in your family. Many of us know people in our family or friends of friends have been impacted by breast cancer. I believe it is the #1 cancer that women die from. That's there. Now imagine, and it's no longer imagine. Now it's reality. Researchers at MIT using AI are now able to detect breast cancer 5 years earlier. People are going to live longer. People are going to live healthier lives because of breakthroughs like this. This is absolutely phenomenal. And this is why Jensen Huang has said that digital biology is going to have the greatest breakthroughs that are there, greatest technologies. From going back into an investment side and the trading side, investment side, this is why I really very much want to be here. With my own money, it's going to be there in the trading report that's there. And we don't want to do I don't think anyone here wants to be here in 18 to 24 months and say, you know what, I sat a presentation in the summer of 2024, the second half of 2024, and I knew all this. I was told all this. I was taught all this, and I didn't move on it. Okay, because if you can imagine what these starts are going to do as these technology come out 18 to 24 months, again, no guarantees in the future, but we want to be there for that. And if everything is just executed, and this is happening faster than anyone could imagine, there's just going to be tremendous gains in these companies, in my opinion, as these breakthroughs do occur. Second one that was done, AI predicts pancreatic cancer up to 3 years before. Again, another breakthrough that's there. And again, this is go back into the framework, go back into the AI framework. You saw this big, gigantic framework with all the industries are there. And here we are just talking about just one piece of that framework, an important piece of that framework. It's healthcare and it's digital biology. And then you see it there, the opportunities are there, and now just amplify it out into all AI. This is why, in my opinion, this is a once in a lifetime. I stated this over a year ago in a live webinar, talked about some of the companies that were there. This is a once in a lifetime opportunity to be able to do this. This is a once in a lifetime revolutionary technology that's going to impact all our lives. And it's a once in a lifetime opportunity on a trading and investment, especially on the investment side, to be able to be in these companies still very early stages. You're going to see more and more of these breakthroughs happen on an accelerated basis. Okay. So again, just I continue to update people that are there and some of the companies that are there. Also suggested long ETF positions. I'm going to spend a couple of minutes just talking about this because this is important. Last year, when I first came across it and said, okay, I saw this is going to be the next internet, except it's going to be larger. I was out there looking for ETFs that basically would be built that would best be able to take advantage of AI. I was very disappointed in the ETFs that were out there. I bought a few. They're not there to be sold. They were put in a retirement plan. They'll likely just be held forever. And they've done okay. I think they're up 40-50%. That's great, but that's there to be held. When you take a look at the construction of the ETFs, it's very important to take a look at their holdings. Many of the ETFs that were put together ahead of time, let's say last year, really do not take into account what is going on in AI. I do my best to keep my finger on the pulse of which the ETFs that are coming out that are there that can, in my opinion, really do represent AI. Okay, having multiple ETFs, some mutual funds, but hopefully they're in ETFs, having multiple ETFs that have NVIDIA in them, in Microsoft, et cetera. All that's doing is just creating correlation risk. It's basically having single stock risk. That doesn't represent, obviously NVIDIA is an important part of it, but hopefully by now you see AI is just so much more larger than NVIDIA itself. Ideally on the ETFs, you want to take a look at the holdings. There's one ETF that just went public a few months ago that really did nail it, in my opinion. They have certain requirements in place that a certain amount of revenue has to come from AI or data directly into that company. And in my opinion, this is the best structured ETF today that's out there. There will be others that will be brought to the market that are there. But don't be fooled by the names of these ETFs. Many of them have the name AI or robotics or anything that might be related to it. But when you take a look at the holdings, again, what you're getting is NVIDIA and a handful of other companies. And I think I saw one that even had it. I think it might have had Netflix in it as one of its core holdings. It's just not the right place to be. Okay, it's not Netflix. May on the data side be able to perform better because of AI. What AI can do on the data side. But when I think of pure AI plays, this is one ETF that's out there to be able to do that. Now, should you subscribe to the service, you'll be able to see that. And I purchased this, and I've just purchased more, and I'm likely going to keep purchasing this ETF. Just give you a heads up. It is a leveraged ETF. I want that type of leverage that's there, but I'm looking to put it away and to be able to be there. they're in the right companies. In my opinion, and looking at their holdings, they're absolutely in the right companies. And we'll see how they do over time. Real important though to focus, make sure whether you move ahead with the service or not, make sure you look at the holdings there and make sure that they really are in the AI companies that are going to have the greatest, potentially have the greatest movement, and also get the majority of the revenues directly from AI. And as you can see, I put it up there 1 week. Within a week, it was already up 10%. Again, I don't care if it's up 10%. I'm not looking to trade this on a short-term basis. On a longer-term basis, I want to be able to be there. But again, this is a report that's updated and just be able to do that. Suggested short position. So right now, I only have one suggested short position. It is tied into EdTech. It's a publicly traded education company. They're already beginning to see the impact of AI impacting them. It's a higher price company that's out there. Not going to short the stock. It's going to be done. It's been done with puts. I already have some puts in the company myself for there. And they've already seen the stock price get hit hard because of AI. They're pushing back. Companies don't just roll over. Okay, most publicly traded companies are made up from very, very smart people as a whole. Okay, and especially as these companies become larger and larger and larger, they're good business people that are there that know that they're doing. They're just not going to roll over. So every one of these companies is trying to fight back in one way or another, whether or not the majority are going to be able to fight back against free. And many of these services that are free out there, it's tough to compete against free when they have paid models that are there. So this company's stock got hit. Management came out and said, we're coming up with next level, the next stage of AI, and it's going to play a role in it, TBD. But they're still charging for what they can do, and the majority of what they can do can be replicated in GPT-4 or GPT 4.0. And once GPT-5 comes out, and it is coming out sometime here in the latter half of 2024 or the first couple of months of 2025, it could potentially obsolete this company over there. So again, fixed risk that puts in place wrong. Stock just continues. If the stock just rises back up again, it's one unit. If it's right, has the opportunity to make many times its unit, and potentially GPT-5 or some other large language model comes out that's there, has the potential to obsolete this company, and that stock has a long, long way to drop. Having puts in there has the potential to make many times the money. Again, I recommend the suggested hedges that are there. Each week, if there's new positions, I'll make suggested new positions. In one industry in particular, I am going to be making in this upcoming week, and I don't know when you're going to be watching this, so it may already be there by the time you're watching this, but I'm adding new positions in a specific industry that's there. Done my research. I've also reached out to people that are knowledgeable in this industry, and there's going to be at least 3 positions in that industry that are going to be added in there each week. If there are new positions, suggested new positions, I will place that there. Just tell you ahead of time, I'm not always going to have, the goal is not to pick up as many positions as possible. There needs to be a reason. It's going to start with an industry, and then what are the best industries there, demand that ties in the industry, and then what can we do to build the best positions around that. Along the way, suggested exits, or rolling of positions, and just yesterday, which ties into this past week's, took 2 positions and had suggested exits on them. So there's always going to be companies in one way or another. Something may change in them. They'll be removed from the portfolio, or there may be something better. They'll be removed because there's something better. With the options that occur that's there, there's going to be expiration when they expire, looking to roll the options and to be able to do that. Finger is on the pulse on a weekly basis. This week's commentary, what I do is I give a 10 to 15 minute and sometimes up to 20 minutes. I think I might have gone 20 minutes audio that's there. The audio is not only my commentary is not only about AI. AI plays a key role in there, but it's also to let you keep your finger on the pulse on the market overall. Again, having been involved in the marketplace now for 43 years, and it's just from experience. There are things that go on an ongoing basis in the markets. There's always things that are moving on. As we're doing this presentation over here, there are a number of things that are going on. Fed has an announcement this week. There's earnings major earnings that are going to be coming out this week. when, obviously there's a presidential election that's going on. There's another election going on in another country that's going on here today. There's things that are going to be coming up over the next couple of weeks in Europe. I'm going to touch upon that when it's important, when it's going to have an impact. And that's outside of AI. It's a bonus. View it as additional information and additional knowledge. It's basically being with me. You have the opportunity to be with me on a weekly basis. You're able to hear what I'm thinking and how I'm going about in putting my portfolio and my trading together. AI is a key part of my trading, my portfolio, but I still trade volatility. I still trade mean reversion. I still have positions that are there. My finger is on the pulse. It has been, try to keep my finger on the pulse on a daily basis on the markets. So me being able to point things out to you, ideally you'll be able to take that and apply it. But again, imagine we're going to be together on a weekly basis. You'll have my insights on top of everything that I talk about on the AI side. Also, there's a trading lesson of the week, and the trading lesson of the week is there for your learning. Teach you a new way to trade, deeper understanding way to trade on a weekly basis. View me as your personal mentor on a weekly basis. The lesson of the week is there teaching you things that are not, in most cases, are not apparent, that are out there, okay? Or maybe just don't go deep enough. That may not go deep enough. Certainly won't go deep enough on the media side. The media's not going to present it like this, but may not go deep enough into some of the books that are out there. Me being able to teach you on a weekly basis, you're getting my knowledge and my experience, my 43 years of knowledge and experience that's there. So this will be there. And also some of the knowledge that's gained, there's a lot of sharing. I mentioned this gentleman over here, Matt Tuttle, who is a longtime client and founder of Tuttle Capital Management. And Matt has brought out he's the CEO and founder of company that has brought out just some really interesting ETFs there. He has his finger on the pulse of the ETF industry. He brought out the short Kathy Woods fund, so SARK, I don't know if you remember that, but he basically gave investors the opportunity. It was really hedge funds and pension funds that took real advantage of it, the opportunity to take the other side of the ARK funds that's there. Again, nothing disrespectful, no disrespect. He stated that to Kathy Woods is basically that if you feel that these companies have moved up too much and they rallied like crazy in 2021. So he brought out SARK. It had phenomenal performances 2022 as the ARK funds basically just imploded over there. Matt also brought out the Jim Cramer fund. So it was long Jim, LJIM, and then short Jim Cramer. So it was SJIM, SJIM. Matt has his finger on the pulse on these type of ETFs that's there. He's going to be bringing out, he's been bringing out a number of the single stock ETFs that are over there, and he will very likely be bringing out, we've had some discussions. It sounds like he's going to be bringing out things that are on the AI side. Matt really does understand AI. So having someone like that who is kind enough to share information, and again, subscriber to the service, and someone is kind enough to share his information, give me permission to share it with you. That's a nice added plus to be able to do it. Again, on a trading lesson of the week, you're going to learn something new every single week. Knowledge Center. I have an AI trading knowledge center that's there. And the AI trading knowledge center there is to teach you on the AI side. Keep a finger on the pulse on what's going on in AI. Coincidentally, with this issue over here, it was all about digital biology, AI and medicine. So sorry that I mentioned Matt up above. The reason I mentioned Matt up above, Matt was kind enough to share this with me. This was an incredible podcast that was done. And you listen to this podcast and you really say, okay, this is really day one of what's going on in healthcare and digital biology. So there's the link that's there. And it was just, it's great to be able to listen to this and get knowledge. Again, you don't want to be just picking stocks. It's pedestrian, it's amateurs. Professionals have knowledge that's in place, and they're structuring the positions. It's multiple pieces there, and there's ongoing learning that's going to go on because AI is just going to continue to grow and grow and grow. I'm going to keep your finger on the pulse if you want to continue to gain knowledge that's there. And even on your own, you'll be able to identify other companies beyond what's in the report. You'll have the knowledge, the additional knowledge to be able to do this. as you see, this title is great. AI medicine, its potential to revolutionize disease prediction, diagnosis, and outcomes, cause for concern, and medicine beyond. It's really just a great podcast to be able to listen to. This is all part of the Knowledge Center you'll be getting every week. And what I also did was to expand everyone's knowledge a little bit further. Okay. Shared an article that was there that basically is showing that AI guided marker is able to identify early dementia prediction in real world clinical settings. So there we just saw, just reported yesterday, early detection, 5 years early detection on breast cancer, 3 years early detection in pancreatic cancer. When it comes into dementia prediction, when it comes into Alzheimer's, I mean, there has not been, if you take a look at on the FDA side, for the approval in place to get any type of treatments for dementia and Alzheimer's, that has the highest failure rate there on the FDA side. Now, with AI in place, okay, and being able to identify early detection in there and the ways to be able to do this is a greater opportunity there for the scientists and the researchers to come with breakthroughs that will make, ideally make everyone's life better. Those who, unfortunately do end up having dementia and Alzheimer's, that's there. But again, AI is going to lead this, that's there. And ideally, if we can identify, which of these companies are bringing out these revolutionary technologies, having that knowledge ahead of time, it's great to have there. Gave another example over there. And again, just to broaden the knowledge. So UCSD, AI saves lives over there. This was done on sepsis. I didn't know this until I read it. Approximately 1.3 million people die every year in the United States from sepsis. Based upon this discovery over at UCSD, they believe they are going to reduce it by 80%. Okay. So all those unnecessary deaths that occurred that will be there, you're going to be able to reduce it by 80% because of what AI has done. Again, healthier lives, making all of us, ideally making all of us live longer. That would just be great. Friends and family to be able to live longer. And then on the investment side, just go back, to what has been stated out there. Matt Higgins said that AI is going to be the greatest wealth creation that's ever been created. Hopefully, you can now see this. Jensen Wong talking about digital biology. This is an example, more examples on the digital biology side. Again, digital biology is going to play a small part, a much bigger picture on the AI Traders Report. But these are all things here. This is why you want to be thinking out 18 to 24 months. We can trade these on a short-term basis, especially. We can trade this, on a 3-month out or a couple-month out basis. But ideally, you want to have positions there that go further out there. Okay. And what I do, before we wrap up here, what I do is as a reminder to everybody on a weekly basis, because we can all get wrapped up in the movements of the stocks, up and down, and do all the type of things. We're thinking bigger picture here. This is a revolutionary technology. This is something that's going to change mankind for decades to come over there. We want to think bigger picture on a basis. So by keeping this framework in front of you, and then there'll be companies that are listed underneath this framework, but by keeping this framework in front of you, it basically allows, what's a weekly reminder that AI is gigantic. It obviously is gigantic. That's there. Many industries. I talked about a few of the industries here today, but as you can see, it touches all industries. And not only does it touch it in the United States, it touches it on a global basis. So almost every one of these industries are there on a global basis. Okay. Next steps. So hopefully this was, you learned a lot from this and able to take this information. If you want this on a weekly basis, these are the next steps. This is how to keep your fingers on the pulse and invest in trade in this once in a lifetime opportunity. As you see, the opportunities are immense in trading and investing in AI, and they're only going to get larger. I said this last summer in a live webinar I did a webinar, then I followed up a couple of months later talking about the opportunities in AI, and it's now looking ahead. It's a year. I've taught 2 classes on teaching traders how to use AI for traders. I believe I was the first person out there that taught traders how to use AI as a learning tool. That's there. That class sold out so quickly, we ended up doing a second class on it. my finger is, obviously my finger is on the pulse on AI. This is an exciting, incredible opportunity here. And this is just going to continue. Okay. And it's just going to get larger and larger. So in order to keep you updated with these opportunities on a weekly basis, I've already launched. So I've launched AI Wealth Creation for Traders. It's delivered to you each Sunday. I do it every Sunday morning. Expect to get it Sunday evening. But what I do is I get it pretty early on Sunday. It takes me, a certain amount of hours to put together the report. I started a few days before. Then I put everything together on Sunday morning. So you can expect, for those of you in Europe, will be in the afternoon. Here in the US, depending upon if you're in the East Coast or West Coast, we expect to receive it sometime later morning, early afternoon. And for those of you over in Asia, it will come probably in the middle of the night for you. You wake up to it on Monday morning, but everyone else will have it here on Sunday. So each week, the traders report includes, number one, you're going to receive a number of the best AI stocks for you to own and build positions for you. Again, I apologize that I had to, white out the names that are there, but out of respect and courtesy to the people, the many subscribers that are already on this, and needs to be done. But as you can see, there are a number of stocks and companies that are there, and more are going to be added. These are stocks that are, in my opinion, have the opportunity to rise substantially, both in the near term and especially on the long term. Number two, you'll also receive what I consider to be the best of the both the unleveraged and the leveraged ETFs that own the correct AI stocks in their portfolio. As I mentioned, too many of these ETFs that are originally poorly constructed. The key is to own ETFs with the best AI stocks in there. This assures that as AI continues its exponential growth, you're in the best position by owning these ETFs. You're in the best position to enhance, put yourself potentially enhance your returns. Number three, I'm going to teach you how to properly structure your trades for asymmetrical returns. You saw a little bit about that there. There's a tutorial. Should you subscribe, there's a tutorial to go about doing that. You'll receive that immediately upon subscribing. And this is at the heart of wealth creation and trading. You can directly own the AI companies, which is nothing wrong with that. That's fine. And as they go up, that's good. There are other ways, though, to be able to do that. The real wealth is made by properly building positions where you're taking a fixed amount of money, that's fixed risk that's in place, in order to put yourself to potentially make many times your money when these stocks explode higher. We've seen this over the last year and a half. I may be mistaken, but in my mind, there's no doubt in my mind there is going to be tremendous explosions in many of these to the upside. Many of these companies and many of these industries that are there, and just look in digital biology and healthcare alone, what's going to happen, and then you have at times many times that on the industry basis. So again, being in that position to be able to build those positions and to be there, I show 3 examples. Again, not every example work out like that, but those were 3 recent examples that were there that I showed you. We're risking 1 unit to make many times the potential to make many times a unit. That's what asymmetrical trading is all about. That's what wealth creation is all about in trading. When you take a look, when you look at the greatest hedge fund managers in the world, the majority of the trades do look like this. They risk 1 unit in order to make 3, 5, 10, even dozens of times what they risk. It's asymmetrical wealth creation at its best. And again, as most of us, would be happy with 20, 50% gains in any of the stocks in a given year. The great wealth is created when your positions can rise hundreds, and if you're fortunate, thousands of percent at a time. Each week we'll identify where the opportunities are in order to be in the position to potentially make asymmetrical returns as AI continues to see exponential growth. For those of you who trade options, there's 2 primary focuses there. Long calls, okay? And they'll often be the slightly in the money to at the money calls, and then, as I mentioned, sometimes they'll be out of the money calls, especially if I believe that they're priced, either properly priced or underpriced. Okay. For those of you also, some of these stocks, as we know, trade in the high hundreds, some of them are in the thousands of dollars per share. Buying the options may not be the best way to be able to, you may not just be able to get any type of size on because the price of the options is so high. many of these companies are now splitting, so that's really good to see, bringing the stock prices into more reasonable levels. But there are companies that are there that are trading the high hundreds that are also trading in the thousands. And there are other companies that will just continue to, the stock price will continue to go up and get up to those levels. So what I do from time to time is I do include bull call spreads that are there. The goal with the bull call spreads is to basically put on positions that are there that have at least a 3-to-1 risk reward ratio. Okay, and there's one that's sitting in there. There's one that's there that I made a suggestion on that has a 4-to-1 risk reward. I'm always looking to make multiple units, but in order to be there and part of those companies that are really higher priced, bull call spreads is a good way to do that. If those companies do end up splitting there along the way, will likely then be shifted over any future recommendations in those companies, but not recommendations, but suggestions in those companies will be done in long calls. And then occasionally, as you saw, cash secured puts, again, not naked options, not naked options without the cash securing them. Having cash secured puts there, where you're saying, you know what, I'm very happy if I get this stock at this level. If I can get this company at this level, I really want it. They're going to pay you to do that. Sometimes they're going to pay you greatly, a good deal of money, especially if implied volatility is extremely high in those companies. The premiums tend to be pretty high on some of them. They're going to pay you. If the stock doesn't get down to that level, you keep that cash. And you can continue to do that over and over again. You saw that one example that I showed over there. And people that did that took it anywhere from between $3 to $5, and you saw the option trading down at 25 cents, and the option eventually expired worthless. Which means they were able to keep all the premium. So very typical behavior in early stage revolutionary technologies. I've seen this a number of times. What we're seeing here in AI, very, very typical. It's very typical behavior, which is good. We're often going to see some great pullbacks occur. These pullbacks provide you with the additional opportunities to profit from them. These are good companies that are in long-term uptrends that have pulled back pretty substantially, have the opportunity to pick up the positions, or if you want to use cash secured puts to bring in some additional income, able to do it with. Of the individual stocks, you have basically what is considered to be trading terminology, trading desk terminology, a hit list. When any of these companies pull back, the cash secured puts give you both the opportunity to buy the companies at lower levels, and if they rally, you secure the income you brought. In my opinion, you get the best of both worlds. Number 5, this is important. AI doesn't only exist. AI companies only exist in the United States. The United States is leading the charge. Ideally, they continue to lead the charge in AI. It's quite important. What is going on, at least in Washington, and some of the tariffs that they're bringing on over in China, and the pressure, it's very much tied into maintaining power and AI leadership that's there. We'll see what the future brings. But the United States, as much as it's the leader, there are other companies in other parts of the world that are leading in certain technologies, and these are global opportunities that are in place. I have 2 that are there over in Europe, at least 2 that are over in Europe. In my own portfolio, I haven't put it into the report yet. My own portfolio, I have just very beginning positions in a couple of companies over in Asia that are doing some tremendous things that are over there. And if you're on Interactive Brokers or any major platforms, these are major companies. It's easy to own these companies. But I want you to think global on this. Okay, AI touches all parts of the world. It's growing exponentially, and many countries are making massive investments in there. And they're supporting the companies in their countries in order for their countries to be able to prosper from them. There's also a couple of countries, and one in particular, they're seeing their companies in AI. They've made investments early in AI and have some cutting edge technology in there. Those companies are being bought out by much larger companies, and some of those companies are publicly traded, the smaller companies, but they're publicly traded. So again, this is a global play that's there. This is going to be here for many, many years to come. So global opportunities are there, and there's already a couple in the AI traders, wealth creation traders report, and I'm going to be adding a few more there. The goal, again, with these, especially with these global companies, On the U.S. companies, a lot of these companies have had head starts. The stocks have moved pretty well, um, and that's good to see. It's a confirmation that this is going on. In my opinion, many of them have a long way to go, and there's another companies that they're just waking up to, and then there'll be other companies that as they implement AI into the use of their process and things, they're going to prosper from the use of AI. The goal is to identify these companies, okay, and get there ahead of others. And from what I'm seeing, these opportunities to get there ahead of others exist even greater, for example, over in Europe than they do in the United States today. These are great big publicly traded companies. Some of them are ADRs. You can buy them, write them directly in your account. Some, require to basically go over to the other exchanges. But the two that I have in there, you can buy right up. You can buy outright. They trade pretty liquid here in the United States. Again, the goal is to get there and identify them before everyone else does, because as the money pours into them and as those companies take off, ideally their stock price just continues to rise. Also, I talked about hedging. I'll teach you along the way. I'll show you how to hedge your positions if you're looking to do any type of hedging, and also share with you that second hedge that's there. You'll want to use that ETF. You'll likely want to use that ETF, especially when a bear market, if and when a bear market does come somewhere in the future, that ETF has had its historical performance in bear markets just gets crushed. It absolutely gets crushed. Having puts in there, having short that ETF or having puts in there, great place to be. Can also be used as a hedge. I really do like it. And I could pretty much assure you, at least I stated this when I first made it available to the subscribers when I launched the AI Traders Report, not one individual came back and said I knew about that ahead of time. And I have a number of professional traders in there. I have money managers in there, the hedge fund managers that are in there. There are some really smart people. None had seen it before. So somewhat of a best kept secret. And just as a suggestion, we can keep the secret amongst ourselves. So when you do subscribe, you'll be able to see that's there. My audio report, which I discussed, it's 10 to 15 minutes put together, maybe up to 20 minutes. You'll get to hear my thinking, not only on AI, but my thinking on the market on a weekly basis. Ideally, you'll take my 43 years of knowledge that's there and be able to see what I'm seeing in the marketplace that's there and some of the opportunities that exist on a weekly basis. Number 8, you're going to learn how to trade from me. And as you saw, I teach every single week. So I'll also be teaching you something new every week. And that takes my 43 years of experience pointing out new strategies and ways to continuously improve your trading strategies. In this case, view me as your weekly trading mentor every Sunday, okay? You're going to be learning from me on a weekly basis. Ideally, you'll learn things, hopefully a number of things here just from this presentation. You'll be learning from me on a weekly basis. View me as your weekly trading mentor, which hopefully is nice to have. Number 9, special situations. From time to time, I will share special trading situations with you that are outside of AI. We all love trading special situations. I love trading them for a number of years, a number of decades that are there. They'll be selective, that will be there, but do expect from time to time, I'm going to see things that beyond our core AI that maybe that are out there, opportunities that will exist that I'll point out and will be included in that week's Traders Report, AI Traders Report. Number 10, special guest insight. My universe of contacts in the trading community is vast. I've been doing this for 43 years. Fortunate enough to have written books with some of these people, done business with a number of these people. I've mentored a number of these people, which is pretty phenomenal to see their success. I've worked with some of the really great individuals in the trading community. Some unfortunately, have passed on. Others we still, remain in contact. And my universe just is always growing over there. My universe and contacts in the AI industry is also rapidly growing because I was an early mover there, not only in the webinars that I did last year, but also the fact that I taught the AI for trading course. It's brought to me a whole new world of people that really do know AI and are leaders in one way or another, are leaders in the AI industry. Benefits of having these contacts are immense because you'll have weekly insights into what other high-level professionals are seeing out there. My ability to be able to go out there and reach out and touch on my contacts that are there. I try to bring all that knowledge together into the AI traders report. Having access to professional knowledge banks that few others have will often allow you to identify and place on positions well before the rest of the world is even aware of them. The goal, again, is to get there before the rest of the world does. In the AI Wealth Creation Traders Report, goal is to do exactly it. You'll have a strategy roadmap, and as you saw from the strategic framework that's there, that strategic framework should give you an idea just how large this is, just how many opportunities, it's endless opportunities that will arise here, not only in the upcoming weeks and months, just, you saw just 2 yesterday just get reported, but these opportunities exist not only in the weeks and months, but for years to come. And for those of you who expect to be doing this for decades to come, this is day one. This is very much still day one. So this strategic roadmap is something that you're going to be able to use, again, for many years to come. And this puts you ahead of the other traders, the majority of the traders that are out there. They're out there stabbing at companies, okay? And they're trying to pick one at a time and trying to pick who the winner is going to be. And as I mentioned, that's inherent in the way things are done by amateurs. It's pedestrian, it's amateurs. We want to do things, everything on a professional level. And what that means is where they're doing it on a tactical level, we're doing this on a strategic level. As you can see, hopefully see here, everything that we've talked about here is based upon a strategic framework that's in place. And we're strategically going about building positions and going about trading. We're not focusing on tactics. We're focusing first on strategy, then tactics follow. Good high-level tactics always follow a good strategy that's in place. For those of you who have built up your business, that built up businesses or have sold them or are running any type of business, that strategy or have military backgrounds. It's always strategy first, then tactics come from there. Okay. And again, you'll be one of the few that apply this professional level thinking to your trading in AI. Number 12, shorting with puts, and that will be done with puts, soon to be obsolete companies. You saw that with Chegg. This is just going to continue to go on. They're already, you take a look at the layoffs that are happening in the technology industry, and Google just the other day just announced that they're laying off even more people. What's happening is that the technology, AI, is replacing people that are out there. They're replacing their jobs. You see some of the leaders in AI that are talking about, what is it, UBI, Universal Basic Income, that's there. There's consensus among some of the smart thinking. I think Musk may be one of them that is saying that, is that there are going to be no jobs in 2035, that AI is going to be doing everything. I'm not going to go that far as to say that, but I've already seen this. We've seen it internally. We've been able to do things that would normally take 4, 5, 6, 7 people to do. Full-time employees able to do can be done now with one, because through the use of AI, many companies are seeing that. And as those companies, but as those services that those individuals are providing in those industries that they're in, as they become obsolete, the companies are going to eventually, their stock price will continue to drop, go lower and lower and lower. And Chegg, I think, is just really a great example. A really well-run company by a CEO and founder who really did everything right for a number of years that were there, and saw his net worth here. I saw how many shares he had there. He was worth hundreds of billions of dollars, and it just basically disappeared in a short period of time. This is what revolutionary technologies do. Okay, this is these are disruptive technologies. They disrupt what's out there. On a positive note, what they're doing is basically they're moving everything ahead. This technology moves everything ahead. On an opportunity side, we want to be long those companies, and then on the other side, want to be, ideally want to be short, especially with puts, the companies in the industries that are ultimately going to continue to be, eventually many of these companies, will be obsoleted because of the technology. And again, the opportunities, they're large. The moves to the downside, they're often substantial. Having lived through multiple bear markets, I have traded through multiple bear markets, and also having seen revolutionary technologies, especially the internet, obsolete companies, many companies and industries over there. The opportunity to make money on the short side with these companies, especially with puts, may be just as large as the long side. Okay, I said that earlier in the presentation. It really is the opportunities that are there. I've seen this now for 4 decades, and we're seeing it play itself out now. It will play itself even bigger, even larger over the next 1 to 2 years. Okay. So also, when you subscribe, you'll receive my audio recording from me walking through the weekly report. I'm going to point out the opportunities, discuss where and how to put on the initial positions, along with multiple ways to trade with the goal of enhancing your returns for the rest of the year. Also, as you saw, I provide you with that AI strategy framework, again, to keep in front of you. And we all acknowledge that this is a great big, like, it's an enormous, immense industry that touches all aspects of life that's out there on a global basis. And again, it's very early stage. So if this is something that you would like to get on a weekly basis, this is how you can go about doing this. This is how you can subscribe to the AI Wealth Creation for Traders Report, become a member of this report. The price of the AI Wealth Creation Traders Report delivered to you each Sunday is $19.95 for an annual subscription. There's a special introductory price for people watching this recording. So for the next 500 subscribers that come in, the price is $14.95. After that, it's going to go up to $19.95, and I do expect it to go up to be even higher than that as it continues to be built out. This is literally for less than the price of a cup of coffee. I had to come with some analogy. I think what analogy would be out there, but I try to make this cost effective because the institutions that are going to be subscribing to the same report, what I expect to do here in the near future is they're going to be paying $12,000 a year for the report. It'll be $1,000 a month on an individual basis. And for anyone who's gotten into now, for the next 500 people that are there, keeping in this affordable, it's $1,495. Also, if you do subscribe now, you will be able to, on number 4, you'll be able to, number 5, you'll be able to be grandfathered in at that price. So a year from now, after the subscription comes up and you decide to renew, it's going to be at a higher price. The renewal price for you, it's going to be grandfathered in as $14.95. My way of saying thank you being there here fairly early on, even though a number of subscribers have already come aboard. The next 500 will come in at $14.95. You'll be grandfathered in that price forever. Okay. Also, special number 2 for the next 500 subscribers. You'll be allowed to use that $14.95 as a credit to any trading course I teach in the future. So, in the past, doing this, I'm doing this on top of my head. In the past 9 months, I've taught twice the AI for Traders course. I don't know when the next time I'll be teaching it. The technology is trading, so it is expanding so quickly. I'm somewhat waiting for GPT-5 to come up because that's going to have a tremendous impact on the ability to use AI for trading. But I've taught the AI for Traders course twice. Taught a 0DTE course that was there that sold out really quickly. Taught an asymmetrical trading course that was there. I do expect to be teaching at least 1 new course and possibly 2 new courses here this year. You'll be able to, meaning in 2024. Again, I'm doing this in the summer, doing this recording in the summer of 2024. So I do expect to be teaching at least 1, possibly 2 new courses here this year. Any course I teach in the future, you can use the $14.95 and apply it as a credit. And again, that's my way of saying thank you for being a loyal Trading Markets customer. Okay. To subscribe today, there's the URL over there. Okay, there should also be links in an email that's going to be sent to you. And if you're watching this on YouTube, there should be a link in there for you to be able to use to be able to do that. Once you subscribe, you'll hit the ground running immediately. And I'll look forward to being together with you every week over the next year. We all know that AI is here to stay. We've witnessed it together for the past year. And as you can see, it's still now day 1. These are just revolutionary breakthroughs that are happening, pretty much on a daily basis in multiple industries. This technology will create the greatest amount of wealth in history, and ideally, you are in the position to be able to do that, to be part of it. Again, can't make any guarantees. It really is taking this knowledge, taking this information, taking the stock structure, the positions, having the stocks move. There's a lot of pieces that go into this. Okay. But if you do believe that AI is something that is a revolutionary technology, it's already taken place. You've already seen it in the rise of many of these companies. It's still just the beginning. And there's many, many industries that is just going to continue to do that with. You do believe in this. This is something that basically, you'll ideally have the opportunity to participate. And again, especially, look at it on the digital biology side and some of the things. Don't want to be in the position looking out 18 to 24 months from now and say, you know what, I sat in this presentation in 2024 and, I knew all this and I didn't act upon it. It's Jeff Bezos's, what regrets, what's the regret going to be in life, especially when you turn 80 years old. Not that anyone here is likely going to turn 80 years old, but it's like, don't want to be here 2 years from now, say, you know what, I just missed out on this. So ideally, whether or not you move ahead with the subscription, focus on AI. The focus is on AI. And I do suggest, obviously, the AI Traders Report. Me and my team, we're doing the heavy lifting there, plus the context that I have. We're doing the heavy lifting there for you. I'm doing the heavy lifting there for you. The report takes about 15 to 20 minutes to, go through the audio. It's under a half an hour a week, basically being able to have everything that's there for you. So if you'd like to subscribe, click the link next to the video. If you would like to do this via email and need any assistance, Darlene Davis, who basically is my right-hand person and runs day-to-day operations for us, you can email her directly, and Darlene will walk you through anything that's needed to be there. So I want to thank you for being part of this presentation. Hope to see you as part of, as a member of the AI Wealth Creation Traders Report. If I do, I will see you next Sunday. So again, thank you for being part of this again, and I wish you a great day. Bye now.